Oh my. I think we're live. I hope we're live. How you doing, everybody? I'm not sure how good my connection is. It might be better now. Slow connection here up until a few minutes ago. How you doing, everyone? Welcome to Stock Markets with Bruce. I'm Uncle Bruce. Today's date, Tuesday, May the 20th. It's 8:35 Eastern Time right now, here live with you from California, here, Rancho Mirage, California. Sunrise underway. It was pitch dark 20 minutes ago, and now we can see I can see the golf courses and the palm trees and the mountains in the background. Things are slowly coming on. It looks like sunset, but it's actually sunrise. Welcome all to the program. Watching the markets in the pre-market as we always do. We're kind of flat here. The Dow was up 9 a little while ago. Now it's down 1. Not going anywhere with the Dow Jones. We're down 13 on S&P. We're down 74 on NASDAQ. The markets have had a 6-day winning streak going, but it's really petering out. These markets are kind of running out of gas. And the reality is this. The stock markets seem to have recovered most of their losses from April the 2nd, Trump Fool Day. Rather than April Fool, it was Trump Fool Day the day after. And it's been a disaster. I mean, it's just been an absolute out-and-out disaster. Not all stocks have come back to where they were. That's the reality. Stocks went down, and some have not come back. They've come back somewhat, but not all the way back. Some are higher than they were back on April 2nd. But all in all, the indexes are just barely trying to get back to where they were. Now, there are people out there, believe it or not, who are convinced that, we're going to go up here another 500 points. And you know what? We're in a bull market again. And here we go. We're going to resume the bull market that we were into, that we saw end right after April 2nd. I have bad news for these folks. I don't know what whose Kool-Aid they're drinking. I know who is feeding them Kool-Aid. But I'm sorry, it's not happening. Do any of you pay attention to the press briefings from the White House with that young girl that is in charge of the press pool in the White House? Levitt is her name. Have you noticed that whenever they ask her about tariffs, she just stands there and says that that countries like China are paying the tariffs, and that countries unfair to America are paying the tariff. I am certain she is smarter than that, but boy, she doesn't come off, does she? Doesn't come off as smart at all. I'm sorry that her hair is blonde, because it just matches the rhetoric coming out of her mouth. Obviously, she is being told what to say by someone back inside the room, back behind the door back there. She's just a puppet following the orders, and is just blindly reading off of sheets of paper as to what to say with regard to certain questions. It is just unbelievable how stupid the words coming out of these people's mouths are. And they believe, or they actually think, that Americans are going to just fall for this hook, line, and sinker. But I guess the strategy is simple. If you can get out of your base, out of that 49.5% base of yours, if you can get most of them to believe anything you say, you sold them. You got them. You got them wrapped up. And now you don't have to convince the rest of the country of anything, because when it comes to voting day, Americans hardly come out to vote. What, 54% of Americans go out to vote? And all you need is half of those to win the presidency in the House and the Senate. So if you can get a quarter of the people gullible enough to follow you, you hold on to power. The problem for the Republicans, of course, in Alabama and Mississippi and Louisiana and Arkansas and Tennessee and Wyoming and any other red state you want to rattle off the top of your head. The problem for Republicans in those states is when more than 60% of the population shows up to vote. This is a problem, because when you get those good old educated people showing up to vote, they're not the ones gullible enough to believe this rhetoric coming out of the mouths of these children in front of these microphones. They're looking at these 20-something children who are, heads of this and doing that, and the cabinet, the Fox News personalities that run the U.S. government. Educated Americans don't fall for that. And so when Republicans get a sense that there's going to be a high turnout in certain districts, we got to put rules into place to stop voting. We got to make it tougher to get votes done here. Because after all, if you get all Americans going to the polls, there are more Democrats than Republicans. There just are. They may not be very loud right now, but I guess the silent majority. Anyway, I'm just a guy. I don't know. The Congress right now is drowning in its tax bill. That big, beautiful tax bill that will add $5 trillion to the American debt load is in the House, and they want to take it to the floor for the final vote. They tried to get it out of committee for days, and they finally got it out Sunday night. Late at night Sunday, they got it through by, I'm sure, one vote. Now to the floor to convince everyone to vote for it on the Republican side. The Democrats are all voting no because they don't want to see these temporary tax breaks that were passed 7 years ago to now become permanent tax reductions for the top 1%. That's what's in the bill. Permanent tax cuts at the top end. Tipping and overtime and all this other BS. These are all partial measures. They've cut back how much you're eligible for. They've put a cap on it for how long it's good for. It's all we'll give it to you now, we'll take it away from you later. And the spending cuts to pay for the whatever trillion dollars thing is $3 trillion short at least. And all in all, it's a $5 trillion increase in the debt load. There's only one group of people that are vocal about this whole thing, and you actually have to listen to them. And bankers in Wall Street who don't want to listen to criticism that they're backing Trump on anything are listening to these people, because these are the folks that buy the junk that Wall Street packages up and tries to shove down your pension funds' throats and international pension funds' throats. We're talking about the U.S. government bonds that are issued to fund the deficit. The United States is now $40 billion in the hole. It's going to go to $45 billion now. By the time Trump leaves office, it'll approach closer to $50 trillion, not billion, $trillion. But he doesn't give a crap because he's not going to be president anymore. He's given away everything he had to give away to get the votes to get in the first place. And he's now riding the gravy train out the door. The American people, of course, rich and poor, are stuck with the bill. The key here is what's the bill's impact to you? Not the tax bill, but the bill, the big bill, the receipt. It's time to pay up. What's it going to be to you? If you are able to save $5 million in your retirement accounts by the time you reach retirement, you will escape the worst of the, what's the word I'm looking for? The inevitable, the end game. Your $5 million might be worth $3 million in today's dollars. It might only be worth $3 million in the future, but at least you're starting at 5 and you're down to 3 and you're still well off. God help anyone who doesn't have $500,000 saved in the retirement account by the time they retire in 10 or 15, 20 years, because that money is going to be worth $200,000 to $300,000 and they're going to use it up in 10 years. They're going to suck that thing dry in 10 years. And then by the time they're 70, 75, 78, they're broke. They're on Social Security, which won't keep up with the cost and will be cut back anyway. And so destitute. You're in the basement of your children's home if they'll have you, or you're in a double wide, or you're in a single wide, or you're living in an RV full time that doesn't run anymore. I don't know. I'm just saying, how low can it get? You're going to be forced to sell your house. Hopefully, you get enough equity out of it to live another 10 years. But what you're going to be is a renter. You're not going to be a property owner anymore. And your standard of living is going to fall and fall and fall. Some of you, not you, but some of your generation will drop dramatically to well below the poverty line. And there's no way out. This is the issue. If the American dollar loses more value against foreign currencies, as it has been now for several months here, the cost of living for Americans will rise. There's no escaping. So forget about a trip to Europe in 5 years. If the euro, which right now is trading at, I don't even know, can't push this up as quick as I want. If the euro is sitting at 112 right now, I finally figured out how to do that, and it's 150 in a year and a half from now, and the pound, which is 133, goes to 160, there will be a huge number of Americans that will not be able to afford a 3-week holiday in Europe. They will not even book the plane because of your hotel rate in London is the equivalent of $500 a night US, and the hotel rate in Amsterdam is $450, and the hotel and meals per night in Austria run you $600 a night. A number of Americans cannot afford a 2-3 week holiday at those kinds of prices. That's just a reality, and you're priced out of Europe. You'll be priced out of Asia. You'll be priced out of other places. And so Americans will be trapped within America, not able to afford to travel elsewhere. And this is a reality for billions of people around the world who cannot go anywhere out of their country because their currencies are worth much less than what the American dollar is worth and going to be worth. They can't even imagine going to Europe. Couldn't imagine coming to the United States for a holiday. Unthinkable. Because their annual salaries in American dollars are $15,000 a year, $20,000 a year, and they're working full time. American standard of living is dropping. The American dollar is losing strength all over the place. The bonds that America wants to issue to cover its debts will have to be increased every week. The United States government will have to issue more bonds to the bond market to pay the deficit and keep everything going. And part of the rise in the deficit will be interest payments made by Americans to the bond market to pay for all the bonds that are out there because the cost of interest continues to rise. Every new bond will have a much higher interest rate than 5 years ago. 5 years ago, you could issue an American bond and only pay 1% interest. Today, 4.5% to 5%. 6 months from now, it could be 7 to 8%. And that is 800 times 8%, 800% more than it was 5 years ago. This is unescapable. And $5 trillion more needs to be financed. That's the bottom line. And so the bond market is saying to the American bankers, and the Fed knows this, believe me, they know this, the Treasury Department, they know this. Senior government officials are well aware of what is happening to the American currency, but the politicians aren't going to share it with you, especially those in power right now. And their lead news organizations that are selling you the propaganda from the right-wing politicians are not going to tell you what is happening. You'll figure it out yourself when you go to your grocery store and attempt to buy sausages from Germany, cheese from Switzerland, chocolate from Belgium, champagne from France, something from Mexico, something from anywhere else. You're going to go, whoa, is that ever expensive? Oh, I didn't know it was that much. I remember at Costco, I could buy some really nice cheese, those round containers of cheese from France for $9.99. How come they're $19.99 now at Costco? What's going on here? Yeah. The American standard of living is on a free fall right now internationally, and the outside world knows it. Funny enough, Germans, Brits, Spanish, Italians, the EU, as the euro rises in value against the American dollar, they're going to look at coming to America as a bargain. But they're not going to come to America because they know they're not all that welcome right now. They don't feel all that welcome when they land at JFK. So what are they going to do? They're going to fly to Toronto. They're going to fly to Vancouver in Canada. And they're going to come to a country that's even cheaper than America because the Canadian dollar is 71 cents against the falling American dollar. And so they're going to come to Canada where they're more than welcome. And they're going to make the feel that way because Canadians feel like Europeans feel with regard to what's happening in Washington. There you go. Just saying. Just saying. I'm giving you the outside the U.S. feel, and you might not like it very much, but that's what it is. Look, you have to know what the rest of the world figures and feels and wonders about. You have to also pay attention to what happened yesterday, the day before yesterday. Britain and the EU have cut a deal to try to minimize some of the ridiculous nonsense that Brexit has created for Brits. Europeans fish, just like the Britons fish, in water where fish do not know where the border is. Schools of fish move around for food, and they breed, and they generate the next generation of fish. And fishermen from Europe and England just catch the same fish depending on what time of the year and where geographically they happen to be. The good news is that the fishing thing is being worked out so that a fish caught by a British fisherman versus a fish caught by a European fisherman are going to be treated as equals when it comes to tariffs, duties, and paperwork. And so that's one thing. Unfortunately, the fish business in Europe is way down because they have killed their own industry by they won't stop fishing out their fish. But that's their problem. Other good news for Brexit, or for those who have been hurt badly by Brexit, is that the youth, under 30-year-old kids who want to study in Europe or in England and get early entry jobs, are going to have an easier time to do this between the two continents. That's a good thing. And then there'll be some other adjustments made. But the damage of Brexit is now 10 years on. The UK pound has still not recovered the loss of value since Brexit. It is still not back to where it used to be globally. And so the UK, average UK citizen has lost serious standard of living advantages. And the shame of it is in the last 10 years, the UK average person would have benefited for 10 years of EU membership on top of what they were already getting. And it was all given away. It was all thrown out the door. And the recovery is still not on. It's another 10 or 20 years of misery. And I don't know if UK residents will ever have the standard of living they could have had they stayed in. But then this is an old man talking to the channel. You agree with me, you don't agree with me, I don't care. It is what it is. Welcome to the show. Look, if you're an option writer, you're here. You're here as an option writer, and you're begging me to tell you what to trade today. I'm indicating to you that it might be a very good idea to stay in a call credit spread position when it comes to credit spreads. If you're going to do credit spread trading on the Qs and the SPYs, you want to wait. And I mean wait an hour or 2 hours before you put your position on. Because what can happen to you, and it's going to happen one of these days, I don't know one day, but there's going to be a problem here where people are going to get all greedy and all eager and twitchy fingered to put on a credit spread. And they're going to put it on too soon, either too low or too high, depending on whether you're doing calls or puts. And you're going to get caught by the market because you didn't wait long enough for the market to tell you what it's doing today. Right now, the market isn't telling us with great certainty what it's doing today. We're down 36 points on the Dow, not even 0.1%. This 36-point move is erased in 15 seconds. Once we open for trading, we'll really know what the money is doing. What we've heard here, what I've been listening to lately, is how retail investors have been piling into the market since the dip after April the 2nd and April the 8th and April the 10th and April the 15th, all that gyration lower. Retail investors started buying the dip. Institutional investors have not. They've bought a little here and there, but they have not hog wild gone into the market like retail investors have. And I will say, in some cases, institutional money is smart money. Not in all cases. There are some dumb institutional traders out there, but all in all, the smart money has been very careful and tentative, because the smart money looks beyond today. They look beyond this next month or two. They're looking down the road 6 months to a year, and what they see, they don't like. What I'm worried about for the markets is not that Home Depot and Costco and Target and these phenomenally well-run companies with phenomenal management. I'm not worried about these people and their ability to find ways to import goods into the United States at the cheapest price possible, and also with their lobbyists in Washington negotiate their way through to the administration to find places to get exemptions from certain tariffs. The exemption game is underway big time and has been since the inauguration. Don't think otherwise. Apple got their exemption within minutes of the Chinese 145% tariff game. Apple has been exempt from all of it. But not all retailers are so lucky, and not the entire U.S. economy has been that lucky. And the reality is, from a lot of these institutional observers and investors, they know what's coming. They know that the average American consumer, if you are not in the top 10 percentile, if you're not in the $250,000 a year or higher income bracket, you're below that, that's 90% of America, you are cutting back your spending. Because right now, the reality is simple. Tariffs are in place on goods coming into the United States. And little by little, the United States government is hauling in billions of dollars in taxes from American consumers through the importers. The importers have paid the money, and now the consumers are paying back the importers for the cost of these goods. Walmart has already indicated we're going to have to raise prices. Target has indicated. Home Depot has indicated. They're all going to indicate. They can't hide it. It's impossible to not do it. They'll try to minimize it. They'll talk the talk. Okay, you're going to try to hear Home Depot today say, "Well, we're going to try to eat some of those tariffs." So people are putting words in their mouth. The reality is, Home Depot every week will raise prices systematically and incrementally as inventory shifts over from pre-inventory tariff inventory to post-tariff inventory. As this turnover takes place, and it's in some cases 60 days, 90 days, 180 days, the prices will be reflective of that. And Americans are being taxed out of their demographic. So if you're in the 30% demographic, you're now going to live the life of a 50% demographic. If you're in the 50% demographic, you're going to live a life of 40% demographic. If you're in the 35% range, you're going down to 25. Your standard of living is dropping. Your dollars coming into your hands are the same. You're going to go, I make as much money, Bruce. I didn't get a pay cut at work. No, that's not it. That's not the issue. It's not that you got a pay cut. Some of you getting laid off, people getting laid off. No, that's not it. What it is at the grocery store, this week you spent $3 more at the grocery store. This week over at Home Depot, you spent $4 more. This week over at Costco, they spent $6 more for the same stuff. Bit by bit by bit by bit, it just keeps coming and coming and coming and coming, and it's eating away from the core out. And where the problem lies for the institutional investors is they know that Home Depot will not make their net profit next quarter. They know that Home Depot will unlikely make their net profit at the end of the year. They know that for Costco, Target. They know it for Safeway. They know it for Amazon. They know it for eBay. They know it for online sellers. They know that American consumers are not going to be able to buy as much stuff as before. They'll buy their loaf of breads. They'll buy their butter. They'll buy their milk and eggs. They'll buy it. But they won't be able to buy the other stuff as much as or as soon as they had thought. So if you need a new pair of shoes, you might wait a month longer to get them. You need a new pair of athletic equipment, you might delay that by a week or a month. This little delay by millions, hundreds of millions of people at the same time causes a slowdown in the overall gross picture. That's all this is. It's like instead of driving on a flat road, we're at a 1 degree incline. You know you're going uphill, but it's just barely uphill. In some cases, you're still flat, but there's a wind against the car, and we're getting lousier mileage. And that's what's going on in this economy right now. It's just started to happen because the tariffs only just got announced April 2nd, Trump Fool's Day on April 2nd. So this is going to compound and continue to build the resistance level. And for a while, if you're working out in the gym and you put 5 more pounds on your bars, you can get the first few reps done. But after about 8 or 9, that 5 extra pounds really drains your muscles. This is what's happening to the U.S. economy in slow motion. There it is. The analysts out there and the pros from Dover who know what they're doing, they're looking forward going, okay, Home Depot escaped, and so did Costco, and so did Amazon. They escaped the noose for the first quarter. But the second quarter and the third quarter of this year, they're not getting out of it. It will be obvious to all of us as we begin to see certain sectors of the U.S. economy are getting the crap kicked out of them. And now we go, oh, this is what they were talking about. Now the average person on the street's going, oh, geez, these PE multiples, these 35 times earnings multiples are now 40 times earnings multiples because the company can't earn as much money per share as they thought they could. And the forecast for the year forward is lower yet. And so now the forward PE multiple is 50. These stocks can't trade at these kinds of multiples. They have to trade back in the 25, 30 range. And if the thinking on the street, and I'm talking about the hedge fund and institutional streets, if the thinking is that earnings are going to be short for certain sectors and a bunch of corporations in these sectors, you sell now and buy back later. That's what you do. You get out. You don't wait for, you don't wait to just average down and protect your position. You get out. Now, one way to protect yourself, institutions do it, you do it. You write options against your position. You'll write call options by the thousands of positions, because if you're sitting on 5 million shares of Apple, you're going to write a lot of contracts. You'll write contracts that expire in 2 weeks, 3 weeks, 5 weeks, 8 weeks, 10 weeks, 14 weeks, 16 weeks, all the way out, going forward. You're going to write a gazillion contracts. And as contracts mature out, you're going to roll them over and keep writing to protect against your investment, because you don't want to sell your 5 million shares of Apple. You don't want to. It's a core holding in your account, but you're going to write calls against it to try to protect against the downside. And this is going to happen with thousands of other stocks. And that's the point I'm making. Don't just look at Apple and go, oh, well, if Apple can hold its value, the market is fine. No. It's the entire street. And this is why I think retail investors have just gone hog wild into the dip, because they've sensed it's a bargain. They feel that based on the first quarter financials and the year prior to that was good numbers, the PE multiple is still reasonable. They're getting in on these deals, perceived deals. Street money, the serious money in the higher end echelon of the planet, they're not so sure about that. They're moving into bonds. And they're thinking, well, we'll get into Euro bonds, not even American bonds, because American currency is dropping against the rest of the world, which means Home Depot stock is not worth as much money. Even if the stock goes up $5 a share, it's worth less money to me as a European than it was 6 months ago. I am losing money holding US stocks. They're losing currency value. So even though the stocks go up, I'm still not breaking even. And there's the thing about the outside world. The outside world buys into America for its growth and its exceptionalism. But if America can't generate 15% more profit this year, the currency drop alone has wiped out all the gains expected for investors in the US market. And this is where the invisible hand comes in and just takes away your standard of living. It takes you down. You don't feel it, you don't see it, you don't notice it. Fox News won't talk to you about it because Fox News can't possibly explain it. And the American public won't gather it, won't be able to figure it out. It's too complicated. Kind of like option writing. All your friends can't figure out what the hell you talk about when you talk about option writing. They look at you like, what? They don't understand what you're talking about. Yeah, because it's way too complicated. Well, that's the same thing with this international trade thing that's going on. America is losing value against the rest of the world. Japanese yen is rising. The pound is rising. The euro is rising. The Swiss franc is rising. The American dollar is dropping. It's not going to stop. I'm just a guy in front of a computer trying to tell you what I think is going on. Kids, your solution, your salvation is to grow your income and your side gig money faster than you're losing it in the world itself. So if your American dollar wants to drop another 5% in value for the rest of this year, your job is to grow your investments by much more than 5%. And unfortunately, you have friends, relatives, parents, cousins, aunts, uncles, work buddies, all trapped in 401ks and IRAs that are managed for them by their employer's chosen money manager, Wall Street. And these guys are putting your money or your friends' money and relatives' money into dog shit. And these folks own junk bonds. These folks own stocks that are losing value to the overseas market globally. They have stocks in these plans on behalf of friends of yours that are not going to, these companies are not going to deliver the financing, so the results, financial results that were expected 3 months ago, 6 months ago, revisions. And there are now stocks that you are aware of personally, companies that have stopped giving guidance. One of the companies that has stopped giving guidance is a retailer that Americans turn to find the lowest priced product possible, Walmart. When Walmart cannot give forward guidance, something is wrong in America. Something really big is wrong in America. When the cheapest retailer, the lowest cost retailer, cannot give 3 months forward guidance, 6 months forward guidance, you think there's a problem here? Again, are you hearing this on Fox News? No. No. So welcome to the guy who gives you the doom and gloom news, which you immediately say, he's political. He's just political. He's just a Democratic hack who's just, pumping up the Democrats and blah, blah, blah. Well, believe me or not, I don't care. I'm just a guy in front of a computer trying to tell you, kids, there's some trouble out there. It's brewing. And yes, you can say to me, Uncle Bruce, you're so wrong. Look at the markets. They're approaching bull market territory again. Everything is wonderful. We're singing Kumbaya out here. How come you don't want to join us? And I say, and I beg you, get into cash and stay there. Write options from a cash strength position to protect yourself against the horror show that is awaiting you. If you like NVIDIA, fantastic. You own NVIDIA and you like it, great. If you're in a position to do so, if you're allowed to do this, I would say you sell your NVIDIA and you turn around and write out of the money cash secured puts on NVIDIA. And then that way you are going to benefit from an up move because, of course, you like it. You've said you like it, but you're also being paid a cash payment upfront to offer to buy back the stock for less than it's trading for right now. I think that's a bargain deal. I think that's a super wonderful opportunity. You like SoFi? Sell SoFi, write cash secured puts. You like GameStop? Sell your GameStop, write cash secured puts. You like Rocket Lab? Sell your Rocket Lab, write cash secured puts. Stock goes up in the next 3 months, 6 months, a year, you win. You win. You've already sold your stock here. You got yourself 20, 35% more money on a premium payout. The puts drop right down to nothing. You'll buy these back and write another set of puts higher again for even more cash, which pays you for the up move in the stock. You win. You win with the stock. If it's flat for the next 6 months, you win. You're sitting on cash, earning interest on all this cash, yours and everyone else's. You're hauling in this cash interest. And those puts are sliding in value anyway. They were out of the money puts, and they're still out of the money puts who are now running out of time, which means you're going to, in 3 or 4 or 5 months from now, buy those puts back for less than half what you sold them for and write another batch of puts, the same strike price. Further down the road, 6 months for another bunch of cash. Dollars a share more in your pocket. You are winning and winning and winning. Why hold the paper and get nothing? I don't get it. They don't pay a dividend. They're not gonna pay a dividend. You like AI, you like super microcomputer, you like Apple, you like Tesla, I don't care who you like. Sell the stock and write cash secured puts and take the cash and take interest on your cash and other people's money. Get paid to hold money. It's so easy. But of course, you don't know how it works. You don't know how to do it. It's because you haven't gone to my website. You haven't gone to stockmarketswithbruce.ca. You haven't gone and looked at my website to learn how to write options. You don't even know what this page looks like. You're going, what is that? That's a website, Bruce? You have a website? It's stockmarketswithbruce.ca, and if you click on to classes, you'll then notice that you can pick up classes on how to write stock options. I had no idea, Uncle Bruce, that you even offered this. Lesson number 1, how to buy, call, and put options. Number 2, how to write, call, and put stock options. Oh my God. Revolutionary, radical guy that you are. And then there's number 3 and number 4, and there's number 4 and number 5, number 6, 7, 8. Here we go. Income from writing put contracts. How to trade spreads, how to trade call and put butterfly options. How does Uncle Bruce pick his favorite stocks? Using poor man cover call writing strategies, stock option rollover strategies. Oh my God, you can even make money when the market goes the wrong way against you. My Lord, stink offers, stink bids, the psychology of the markets, how to maximize profits from writing stock options, advanced poor man cover call strategies, how to use other people's money to profit in this options market. That's all about condors, iron condors. My God, I didn't know. Fixing option trades, how to maximize profits again. And then there's this in your back pocket. Why don't you look up Uncle Bruce for an hour? Hang out with me on camera privately for an hour. It's going to run you $500. You know what? I should be charging $5,000 for these because my viewers tell me, my God, your $500 cost is a joke. I have learned in 15 minutes hanging out with you. After I show you what I'm doing, you just tell me to do this and do this and do that, and I'm like thousands ahead already. I'm going to be way up this week because of these changes. Are you serious about making money in the market? Really? You really want to change your life? Well, you have to make the first move. Classes are waiting for you. You can take class number 1 and number 2, and you can immediately open up a practice account at any brokerage firm and start practice trading option trades right there. Number 2 move, you can open up your own margin account, your own options account, and start writing options right away, which will pay for your lessons immediately, will pay for the future lessons you're going to take. Because some of you are sitting on thousands of shares of stock that you can be writing options on right now. Something as simple as writing a call option that expires 6 months from now that is 15% out of the money, like where you're writing a call option way ahead of your stock price. There's no way they're going to take those shares from you for that price, and you're going to be paid cash to just sit there and let someone buy stock from you at a 15% higher price than it's trading at right now. That's your commitment, and you've got the cash in your account right now. That cash is more than what you're going to spend on my lessons on how to do it. In other words, you are earning while you're learning. It's like being an apprentice. 18 lessons are waiting for you, but you got to step up and want to do it. There's the website right there. Go ahead and grab some and let's go. Thank you all for being here. Appreciate you all. A number of you have done this. That's why there are 224 people here. They've done it, and they're doing it, and they're generating revenues. Richard Carlin is in the house. Tom Kaufman. Robert is in the house. Thank you. You're all good. You're in the hospital. My God, I hope you're getting better, my friend. Please get better. Big E is here. Stuart is here. Jeff. Good morning, everybody. Let's make that moolah, please. Chase, Rosita Parker is here. Lear Mortimer is here. Deep Value, Rice Check, Juan, Aurora, CKT, all with thumbs ups already put on this channel. Thank you for the thumbs ups, you guys. Jeff, I wish there would have been a 41-51 answer. I don't want to be 50-60. Oh, there is a poll out there. That's right. I forgot. I've asked you the skill testing question today. 215 of you have figured out how to answer this question. How old are you? I want to know how old you people are that are watching me here. Under 30 years of age, only 5% of you are under 30. Not surprised. I'm not surprised to see this number. I wish it were higher, but unfortunately, the gamblers of the world are under 30 and they're getting their clocks cleaned in this market. Some think they're doing really well and they get lucky. Once in a while, you get a good trade. Very few are educated enough to win in this trade, in this business. But yeah, under 30, not too many. Look at the 30 to 50-year-olds. 57% are 30 to 50. 50 to 60, 21. And over 60 years of age, 17% of you are over 60. Thank you for answering this question. Please tell me, how old are you? This tells me a lot. If you're between 30 and 50, which is the majority of you viewers, by the way, we have 92 thumbs ups. Thank you, everybody. If you're between 30 and 50, you are seriously, really taking this market seriously. There's no ifs, ands, or buts. You are taking the advice seriously that we're talking about to become a better investor. You figured out at age 30, 35, 40, 45, 50, up to that level, you figured out that the returns you're getting from your 401k with your employer are garbage. The returns that you're getting from buying ETFs on your own through various investment entities is crap. You're noticing that for the last 8 years, the kinds of returns you're getting didn't even match the Biden years. You couldn't even get a 25% return, which is what the S&P was giving, just the index. You couldn't even do that. You've realized that, some of you have realized that you're now 45 years old. You've been contributing to your 401k for 10 years, loyally, faithfully. In Canada, you're throwing money at your RRSP every year. You're maximizing out your RRSP. You're putting the money to work through your bank in Canada, through all those ETFs that they offer. Dozens, each bank has dozens of them. And in the United States, you have all these ETFs, and you've diversified your investments so that no one area is overexposed. You've answered those questionnaires online about your risk tolerance levels and all that stuff to find at the end of the day, you're making 4% on your money. You're just getting ripped off. You're just going nowhere. And it's been 10 years. 10 years of throwing money in there, and you're nowhere. And now you're looking at this going, Jesus, Bruce, in the last 2 years, my buying power has gone down by 15%. My accounts are losing buying power. These are retirement dollars. What am I retiring on? Nothing. You're going to be broke in 10 years once you retire. Within 10 years, you're going to use up all your money. Where is your payoff coming from? You can't afford a house. Can't afford a down payment to get a house. You can't afford the 6-7% mortgage. How am I winning? I can't even match what my mom and dad did. That's right. That's right. Well, you found me. I don't know how, but you found me. You're here. Thank you all for joining me and becoming option writers. Deep Value, 50-60 is still really young, Chase, Rosita Parker, laughing out loud. Charlie. Good morning, everybody. Stock Jockey, welcome to the party, pal. Mandu's here. Tom Kaufman. Gamer, Deep Value Options is actually 32. His name is Renato Barato, and he is a pedo, no cap. I have proof. Gamer, you don't have a life. You need to do this kind of nonsense. I don't understand it. I don't understand why you're why you bother being here. You're not learning anything. You're not helping the cause. I don't get it. I'm old. Goodness, says Gustav. I'm old. Andrea, hey. Good morning, Bonjourno. Doug is here, Roaring T. Good morning. I'm not a troll. I've been coming here for years because I like Bruce. There you go. James, good morning, everybody. Frugality, whatever happened to the so-called fiscal conservatives lowering the deficit, bringing down inflation? Seems they're doing the completely opposite. Isn't that funny? Isn't that wild? John T., I've noticed that when I do call credit spreads with the Qs, I stress more than with put credit spreads. I always think Trump will come up with news to push stocks higher. It seems to happen more than the other. Charlie, I agree, John. Both times I've lost on the Qs is when I wrote call spreads. It went up, and I got nervous, and I bought them back. Charlie, in the end, the original contract I wrote would have been a good trade, but it's nerve-wracking. Frugality, at least billionaires are happy as pigs in a poke. Good job, Mega. Let's see if they trickle down to your heads, everybody. David, did anyone get in the UNH, United Healthcare? I think BRK bought in. They love insurance companies. Brian, is this a liberal channel? What is this channel? It's a channel where we try to talk to you about making money. Honestly, it's really what this is about. You gotta stick around for the whole show. Charlie, yes, I've been fortunate enough to ride it and profit, but the stress has been higher. Jeff, Charlie, curious as to why you didn't roll the position, Charlie. No, it's an option writers channel, Brian. That's what this is. Charlie, I did 1 or 2 times, Jeff, bought back the calls, wrote puts to minimize the loss, but always 0 days to expiry. John, I don't agree with any of Uncle Bruce's policies, but it's all good. Nice to hear both sides, no matter how crazy it sounds. Eddie Martin is number 60 on the thumbs up meter. Stock Jockey says, giddy up. ACDC, are you Canadian? Oh, no. Jeff, Frugality, the fiscal conservative is a myth. They've never brought down the debt. Their tax cuts, beginning with Reagan, are responsible for all the current debt. Tax cuts exploded the deficits. ACDC is laughing. My relatives want to flee from Canada. Yeah, well, they're not coming to America. They're not going there. Roaring T, I remember during the Great Recession, people from England were coming here to buy bulk jeans to resell over there because the dollar to pound differential. Because the pound was so valuable, they'd come to America on a holiday, bring back a dozen jeans and flip them over there, pay for the trip. Yeah, if you can make $50 a pair, the equivalent of $50 a pair of jeans, and you can flip into a dozen jeans on a 2-week holiday, that's $600. Way back when, that paid for the flight. Round trip. Corinne, number 63. Jeff, John T. Yeah, it's all good. I enjoy the trading part of the channel. I also get a good laugh at the delusional rants. There you go. Vanessa, did you see where the 23andMe was being bought by Regeneron? The company is not being bought, but the 23andMe DNA is being bought. Yeah, but 23andMe, the shell company, is left over. I don't know if the shares will be worth anything in the next little while. I honestly don't know. But I saw that deal go through. Yes. What else? Vilbus, delusional rants, laughing out loud. Uncle Bruce is pretty middle of the road to some sane observer of our current, whatever show. Hey, BP, Uncle Bruce, Starmer's UK EU deal panned by conservatives and other parties and planned to be reversed as soon as they're back in power. Again, UK betrayed by its preeminent government. Labour has already gone against its election promises. And BP and I have had these spirited discussions about Brexit being good for Britain or bad for Britain. And now these moves, are they good for Britain, bad for Britain? No matter what the PM does, and no matter what Canada's Prime Minister does, and no matter what Trump does, and no matter what the President of France does, and there's going to be winners, happy people, and pissed off people. No kidding. It is what it is. But if at the end of the day, the UK can reduce the paperwork between the UK and Europe, if Northern Ireland can trade with Ireland without a bunch of paperwork, if Brits can buy property in Spain and enjoy it, and people from Europe can come to Britain with a lot less headaches, especially business people, it just has to be better. But again, the philosophy of it all, it's never going to stop. It's just never going to stop. Hey, Trip, a question about GameStop. I don't understand your enthusiasm exactly, why your gut tells you this will continue to increase in price. If the stores break even at best and you're only bringing in $300 million a year in interest, shouldn't the company be only a $10, $15 stock? I'm just not seeing the potential here. Yeah, well, what you're talking about is what you see and what we talked about. We've talked about how the only thing we know The only thing we're aware of is that the company is reducing its store counts. They've walked away from Europe in the last year now. They just walked out of Canada. They're probably still reducing underperforming locations. We do not know what they're doing with $6.2 billion. You do indicate that they're bringing in $300 million interest. Why should the stock be worth more money? I agree with you. If they're not going to do anything with the 6.2 billion on hand, then the stock will be destined to be in the 10-15 neighborhood. I guess you're right. But I don't think that's the case. I don't think the company has raised this kind of capital to sit on its hands. What you probably are going to notice is as time goes by, and I'm hoping it'll be sooner rather than later, we're going to hear about other investments being made by this company, other ventures being entered into. But so far, silence is deafening, isn't it? And so, yeah, people are wondering, hey, when, what, how, where, who, anything. Tell us. 27.82 on the stock. What's this thing going to do? What are they doing with 6.2 billion? Can they generate a 15% return, putting the money to work into something else? Can they bring in a 25% annual return on their money instead of just a 4 or 5% interest rate return on their money? That would make the stock go higher. Are they going to become an investment banker? Are they going to sell off GameStop, the retailer? Are they going to sell it? And the public company is just going to sit on a mountain of money and become an investment entity, and they're going to call themselves GameStop Investment Company or EB Game or EB Hedge Fund Corporation. I don't know. I don't know, but that's the speculation, right, Trip? I think that's why this is where it is. What can I say? Mark, number 73. Ron Dugan, I work for a vendor for Lowe's. We're in molding and project lumber. The only thing we know is that everything will go up by 10% minimum. I see people cutting back firsthand in ground zero. There you go, right there. There it is. Stock jockey, welcome to the party, pal. BP, leader Kemi something described it as a total capitulation, arguing that it compromises UK's sovereignty by aligning with EU regulations and extending EU fishing rights in British waters until 2038. BP, EU trying to rule UK via the back door. There you go. Well, you're 15% the size of the Euro zone. The Eurozone is this big, and you are this big. You're a nothing burger compared to the EU. You're a nothing burger in the United States. 3% of all trade is with Britain. You got nothing. You ain't got the cards, as Trump would say. You don't have the cards, and you think you're a sovereign empire of greatness. Welcome to the party, pal. You happen to be geographically located just nicely for planes to land in London, coming over from the Atlantic to refuel up and go somewhere else. There's certain things you offer and a lot you don't. And at the end of the day, the EU knows how powerful they are compared to your country. And Britain needs the EU more than the EU needs Britain. And that is the reality that Brits don't want to hear. They don't want to be told that. But we're on the outside looking in, going, it's so obvious. You can't help but notice it. What can I say? It's a great place to visit. The UK, great people. Love spending time in the UK. Southampton, London, Edinburgh, Liverpool. Love it. We love the United Kingdom. But, you're an island. And there you go. You're an island, and Europe is a continent, and there's a whole lot of opportunity there that you don't want to deal with because you think they're going to dominate you. Well, guess what? They do dominate you. There's nothing they can do about it. Jeff, time will tell, I guess. Second quarter earnings we can always revisit. Savage of Wall Street, good morning, my fellow simpletons and degenerates. Anyone else feeling that FOMO in the markets? I hope you kids are writing lots of covered calls and on stock that's being best up or bid up, writing cash secured puts. Make money now. Couldn't agree more with our friend there. You know what? You're here to make money. You want to talk to me about the philosophy of politics and You want to talk to me about how your country has to have its own independence and that. Well, more power to you. God bless you, and I hope it all works out for you. But I'm just kind of like, I'm a guy who's just trying to follow what's going on. Looking from the outside looking in. It's nothing personal, but I'm on the outside looking in. And I don't know. I'm just doing what I'm doing. I don't know. I'm just once you get richer, it's really all there is to it. We're opening now for trading, everybody. Welcome, everybody. Vivash, Uncle Bruce, should we buy UNH? I would avoid this thing. There's more problems coming. Happy Tuesday. Time to fill our pockets, focus less on drama and more on dollars. And so don't focus on stock stories. Focus on making money from writing options. That's what you want to focus on. Simple as that. Not only the cheapest retailer, the biggest retailer in the world. That's true. Savage of Wall Street. I sold 5 1250 Webull cash secured puts yesterday, which expire in October. And some delicate gambling sap gave me $380 a contract. Stock is up $1 today. Cash secured puts are printing already. Thank you. May I have another? Juan is going, neat. Savage Wall Street. Yes, sir. I put away $6,250 till October, safely stored for 5 months, and some idiotic, dumb, degenerate, poor gambling fool decided to pay me $1,900 to literally buy a stock that I will gladly pay $12 for anytime. Wow. Well, there you go. Doughboy, Savage, any news on Bull, or is this upcoming earnings hype? Henry T, good morning. Dude, good morning. Juan, good morning, everyone. Let's get some dough today. Amy J, good morning. Cindy B, I have 11 leaps on GameStop for 2027 and write calls on them. I hope the momentum goes for a while. The premiums are pretty darn good. DAK is here with thumbs ups. Brian is hitting the thumbs up button. Henry T, hi, Uncle B. It's worth a look at Lamb research for options. Thanks. Wouldn't know unless it's a top-notch selling, highly tradable contract with tight spreads. Don't bother. Don't bother with these. Pick a couple of favorites, but really concentrate on high volume, tight spread option trades where you won't get ripped off by your broker. Some of you folks are giving away most of your money to the spread, and it's ridiculous. It's unfortunate. Richard, thank you. Jeff Glass, just call me Larry minus spending my time with a homeless Canadian instead of enjoying France. Do boy. Good morning. I'm number 115. BP. Okay, Uncle B. We're 1/6 the side of the EU. However, ask yourself the question: why do the citizens of the European Union want to migrate to the UK, legal and illegal? You must have something they want. You think Germans are dying to come to Britain? You think French are dying to come to Britain? Oh, come on. The immigrants coming to Britain are the same immigrants dying to go anywhere, to get out of sub-Saharan Africa. They're trying to get out of Syria. They're trying to get out of Turkey. They're trying to get out of countries where it's really bad. And they'll even go to Britain. They'll even go there. It's not the first choice. You're not the first choice, okay? You're nice. You're polite. You're a wonderful country. You're great people, but you're not the first choice. I'm sorry, Mike. It's the fish and chips. That's what it is. And it's the Beatles, and that's what it is. But you're not the first choice. I'm just a guy trying to help you make money. I'd rather talk to you about just making money, okay? BP says, no, it's the Germans, the French. Everybody wants to come here. Oh, we're the best in the world. I don't think so. Welcome to the party, pal. The British economy, the British deficit. Oh my God. The tax rates in the UK for what you get. I think they want to go to Norway. They want to go to Sweden. They want to go to Liechtenstein. They would rather go to Switzerland. They would rather head to Austria. I think there are places they'd rather go. But easier said than done. Jeff, starting off with a dip. My covered calls don't hate it. BP, if they could, they would go to America as well. Yeah. Right now, I don't think so. Anyway, just a guy. I just want to talk about the market now. I want to talk about the market. Let's see if we can get you richer, kids. Let's get on with the program here. Thank you all for joining me this morning. Welcome to the party, pals. Let's take a look at the markets, okay? We're up 86 on the Dow, it would appear. We'll see if that lasts a while. We've only been open 4 minutes. Welcome all to the show. I don't know if anyone rang the bells today. Jeff Glass kind of did the bells there. DK gave us thumbs up. So Thank you. I know our friend Mr. Titus is overseas right now, so Mike H. I'm sorry, America's closed right now. We're kind of closed. Okay, the Qs are at 519.67. They're down 233. And the Dow is showing a negative 43-point drop. We're down 17 on S&P. We're down 80 on the NASDAQ. And that's why the Qs are under pressure, down 220. SPYs are down 147. SoFi down 15 cents. GameStop up a penny. Rocket Lab down 19. ASTS down 3 cents. We have MSTR down 280. AI down 36. Supermicro down 66 cents. NVIDIA down 140. Tesla's up 10.30. Palantir up 46 cents. The Google shares are down 77, Apple down 214, Microsoft down 220, Meta down 260, Broadcom down 182, Amazon down 114, Intel down 12, Netflix down $3, SmartRent at 87.8 cents, up a penny. Coinbase down 18 cents, Costco down 153, Eli Lilly up $4, Uber up 36 cents, Cisco down 32 cents, Adobe down 249, AMD down 105, Unity down 38, Enphase is up 77 cents. Aspire down a nickel, but it's 11.65. Moderna is up 16 cents. Pfizer up 27 cents. IBM down 153. HPQ down 20. Home Depot is up 4.97 this morning. It was higher than that though earlier. Vanek down 220. Goldman down 138. Boeing is up 160. Target down 32 cents. JP Morgan down 65. Walmart down 19. Disney down 4. American Airlines down 9. DraftKings down 47. Centenos, AMC down a penny. Royal Caribbean down 4.79. Okay, so more negative than positive, obviously, because of these markets. Down 73 on the Dow Jones, down 85 on NASDAQ, and the Qs are 519.39. Let's see what they do the first hour and a half. And let's see if this down dip has got any momentum to it. Will the Qs come back to 520.21 2 hours from now and kind of hover? If that's the case, you want to be writing 525, 528, $530 calls that died today, and or puts 510, 505. If the the Qs go down to 515 an hour from now, then you want to look at puts way below that. You want to be down to 500, 505, at least in that range. And then the calls, you'll be looking from 515, you'll be looking at 522, 525, 528, 530 for today's expiry. And you're going to be cautious and careful and with a wider spread, and you're going to be patient. You're going to take your little nibble. If you score $100, $200, $300, $400 today on a little credit spread, you're going to say, thank you. $300 in one day, 20 days like that in a month is $6,000. How much are you using to make $300? Are you using $3,000, $5,000 to make $300 and making $6,000 a month from it? That's not bad return. Don't be worried about only making a couple of $100. That's the point of small investments like this. Smart move. Thank you, everyone. Let's go. Doug, Uncle Bruce is hilarious. Say it as it is, and that's the way to go. All right, welcome all. Everyone's commenting on the UK, German, French thing. I don't care. I don't care. I don't have to care. You don't have to care. You don't have to give a crap about any of it. What you have to give a crap about is, are you making money or aren't you? Are you making money doing an option writing strategy? Are you making more money than you could have made letting the pros handle your money for you? The professionals, these money managers, these ETF managers, these bankers who tell you to put your money into 10 different diversified ETFs. Are they making you more money than you can make writing options? I don't think so. I think you're here because you can make a lot more money from option writing than any managed portfolio that's out there. I am certain of it. And you know I'm right. Those of you who have mothers and fathers and grandparents who are getting ripped off by their advisors. They're getting garbage returns for the hundreds of thousands of dollars they've put together over their lifetime. And when they need it the most, return and growth, they didn't get it for the last 20 years. And now you are avoiding that trap. You've tried to talk them out of it. You've tried to pick them up and say, hey, listen. But they won't listen to you. It's okay. It's not your fault. You have to take care of your household. And if you're younger, Uncle Bruce, I love it when you make everybody upset here. And when you're a younger person, you're 30, 35 years old, and you find me here, you're 40, and you now are an option writer already. You're not an option writer in your 60s. You're an option writer in your early 30s or early 40s. You are going to compound your retirement account now to levels that are going to be unrecognizable by the so-called pros that are trying to tell you, oh no, you shouldn't be managing your money yourself. You should let us manage it for you with our experts. Those guys are showing charts. They're going to show you charts. Well, how much money you'll have in 2050? How much money you'll have in 2060? You're going to go, what? I'm retiring in 5 years, pal. I'm going to be retired at age 46. I'm not working until I'm 65 like you guys are setting me up for. No, thank you. And at 65, I can't retire. And there's the shame of it. There are people who are greeters at Walmart. Have you noticed the greeters at some of your Walmarts out there? How old are these people? Have any of you ever asked the greeter that looks a little older to you how old they are? You'll be shocked to find 70-year-olds, 75-year-olds that are greeters. They should have been retired 10, 15 years ago. Why aren't they retired? You listen to horror stories out there. Don't get caught in that trap. Don't get caught in that trap. You know what you want to do? If you want to work just to do something with yourself when you are 75, why don't you be a golf course marshal? Why don't you be a greeter at a tennis club? Indoor, meet and greet and say hi to folks. Walmart greeter? You want to be a Walmart greeter? Good Lord Almighty, the diseases walking through the door, the kids with their sniffles, and oh my God, you're 75. You're so vulnerable to catching a nasty virus. Good Lord, I'm just a guy hoping you don't have to do that kind of stuff. That's all. Okay. Hi, everybody. I just love it, Bruce, when you get everybody upset. Dude, now you're going after the greeters. Yeah, stick it to them, Bruce. Give it to the greeters. Nail those bastards. That's what they deserve. Oh, no. I don't know, kids. I'm just a guy hoping that you're well enough or wealthy enough to live whatever life you want. I don't know. I don't know how high you want your investments to get to. But if you're in your 40s, your 30s, 40s, and 50s, you've got a lot of time here to really compound your dough. I mean, really make a difference. Keep in mind that if you retire with $500,000 in your retirement funds, you're going to run out of money in 15 years. If you've got $1 million with the inflation rate coming up here, you'll make 20, 23, 25 years. If you've got $2 million, you're not going to run out of money. You're likely will earn enough, at least interest on it, if you don't write anymore, to not lose anymore. But if you're a writer, you're an option writer now, and you're going to be an option writer well into your retirement years, because why not? You're going to keep compounding and make more money in your account. It'll grow by more money than you can spend, than you're taking out. And you're going to maintain your lifestyle that you have now as as you've lifted it. You got into the top 10% range, you're going to stay in the top 10 percentile. If I can get you to the top 5 percentile, you're going to stay in that 5 percentile, the top 5 percentile. You're going to make a difference. But you're going to have to want it. If you're comfortable right now being a 50 percenter, you're making $80,000 a year with your household, and you're happy living paycheck to paycheck, and you think you're doing great because you're doing better than your brothers and sisters, well, then fantastic. Keep it going. But if you want to move up the ladder a little bit, can you make $3,000, $4,000, $5,000 a month side money writing options inside your 401k or your IRA, your RRSP? Can you add $50,000 a year in value to your RRSP for the next 15 years? You're going to have millions of dollars over there. You're going to get somewhere. You have a shot at really changing everything, because good Lord, how many Canadians and Americans have fallen for this fantasy world that you contribute $500 a month to your retirement plan, you'll be able to retire comfortably. Not a chance. Not a chance. And that excludes the idea that you might get Diabetes. You might fall and fracture your hip one day. You may find that arthritis has slowed you down and you can't work anymore. You've got cancer. You've got, I don't know, high blood pressure, hypertension. I don't know. There's no guarantees 30, 40 years from now. Make it now and compound it now so that no matter what happens down the road, at least on the financial side, you're going to be all right. Because it's not only yourself you have to look after, it's the family. What if during your supposed prime years, you are not able to work anymore and you've got 13, 15, 17-year-old kids? They're not ready to leave the house yet. You've got to get them through their next 5, 6, 7 years until they're in their 20s before they're in any way able to go out on their own, if that's even possible. It's go time right now. Don't be putting us off. It's go time. Build your life. We're down 251 on the Qs, 519.50. The Dow's down 89. Nasdaq's down 89. S&P down 19. Oil down 43 cents at 62.20. VIX 1810 down 4 cents. There you go. Giddy up. Stocks moving the most today. Home Depot, Tesla. Is that CATL? Is that Caterpillar? I'm not sure. United Health, NVIDIA, D-Wave, Quantum, and more, they say. There you go. Welcome all to the program. Juan, hey, Uncle Bruce, I wrote back in February, SoFi $16 contracts expiring July. They gave me $12.90, but my break even is $13.42. Should I roll it to Jan 26 now, or buy it back and write a new one to Jan 26? So these would be cash secured puts, I'm guessing, because he didn't tell me. I'm thinking this is cash secured puts, and the stock is right now at $13.54, and so those 20. What would you say? 16s. The 16 cash secured puts. I'm assuming you didn't write cover calls, right? You wrote cash secured puts. Yes, cash secured puts. Thank you, Juan. There it is. All right. So you wrote cash secured puts, and you brought in 12. Do you need to do anything? You don't need to do anything right now. No, you don't have to write till January at this point. Let these shares inch their way up to 15, 16 in the next couple of months, next week, today. Let them go higher. And watch the shrinkage happen very quickly on these. And then, you'll roll up to 20s for Jan 26 or June 26, and you'll haul in a bunch of money. But let the stock go up $2 or $3, $4 from here. Right now, no, I wouldn't bother. That's my take on it. Sometimes folding your arms is the best thing you can do. Then just let the stock do its thing. Let Noto bring out a series of announcements that are due anytime, any moment, whether it's after the close, pre-market one day, on a weekend. What Noto is putting on is not bad. It's all good. And so let Noto do good things. And let's see if the stock goes to $15, $16, $17. What the hell? Anything wrong with that? No, nothing wrong with it. Welcome all to the program. Thank you for joining me today. I'm glad you're here. I thought I heard a knock on the door. Maybe it's ice. No, there's no one there. It's a beautiful sunny day out. See how bright it is, the glare from the sun? There was no knock on the door. Welcome all to the program. How you doing? Thank you, sir. Appreciate this. Vilbus, let Noto cook. That's right. Let him cook this thing higher. Noto becomes a billionaire at 25 to 35 a share. He knows he's only $12 away from becoming a billionaire with all of his stock options. Just let Noto. Allow Noto to become a billionaire and make you guys millionaires and 100,000aires. Let him make you rich. Have you written your cash secured puts yet on SoFi? Are you into a position on SoFi? You should be. This is your moment. This is your pause in the activity. You can write 12s, 13s, 15s, 16s, 17s. $20 cash ticket puts, whatever one you want, but take the money and earn some interest on your cash. Giddy up. We're down 365 on the triple Qs to 518.36. Remember yesterday we had 522 for a moment? Now we're back to 518 on those Qs. The Dow's down 118. We got a 27-point drop on S&P. We got a 129-point drop on NASDAQ. Savage of Wall Street says, yesterday I wrote 3 AI 2250 cash secured puts. AI, we're at 2266 right now. They expired June 20th, and then I took in about $2 a share. And I'm tired of going out of the money. Time to dare these guys to give me those shares for $20.55. Let's go, almost 10% in money for 1 month. Not a bad return on investment. That's 120% a year. Jeff Glass, any particular news bringing the market down? Yes, the realization that the United States is bankrupt. The realization that the United States is not going to stop spending money like drunken sailors. The realization that the United States will allow its richest people and its most profitable corporations to have a permanent tax cut of epic proportions. The realization that the United States will owe $5 trillion more to the rest of the world than it owes now. And the realization is that has to be done at a higher interest rate. There's no way the world is going to issue $5 trillion more to America at a lousy 4-something%. They're going to want 6. This is the realization, and that is the speculation of the outside world. Americans inside America are oblivious. Most Americans have no clue. They don't hear any news about this. They don't hear anyone they trust about this news, and so they're oblivious to it until it happens. There are Americans out there asking themselves, hey, I went to Europe last year and we saw Paris and we saw Amsterdam and we were there for 2 weeks. My girlfriend and I, my husband and I, my family, we spent so many dollars last year to do a 2-week trip in Europe. We're pricing out this year a trip to Europe. We'd love to go back again. And it's 20% more expensive. Why? Why is it 20% more expensive? How are tariffs adding costs to us to travel to Europe? They don't realize the American dollar is plummeting against the euro, plummeting against the pound. The euro was supposed to be at par. The euro was supposed to drop against the American dollar so that the two would be at par. Now the euro is at 112. It's going to 120. The euro is going to 130. Americans are going to be priced out of European vacations. Not every single one, of course, but on that demographic scale, the first 40% demographic can't go. Now the next 20% won't be able to afford to go because they're not going to come up with $3,000 more money, $3,000 more for a 2-week holiday to Europe. They can't afford it. They're going to have to put on their credit card at 25% interest. You want to pay $750 a year in interest on a holiday that you just took that you're going to pay off for like 2 years? Really? I don't think so. It's not going to happen. That's why that's going on. Dude, Jeff, I think there's just an overbought market right now. Also, we're so far above the mean on the number of stocks. A pullback is in order. Savage of Wall Street, the realization that these silly Republicans can't lead. They are weak on national defense, weak on public safety, weak on FEMA issues, weak on upholding the Constitution. They are corrupt grifters. There are other problems right now. If you notice the close incidents of aircrafts, Newark Airport is a problem. Jet wings getting clipped at various airports, little things, but massive tragedies. So far, nothing incredibly massive, but there is the potential. The busy summer season is coming here where traffic is just going to be higher anyway. What's going on? The other issues are that certain departments of the United States government, departments run by cabinet people that were former Fox News personalities, they are running out of money. Their annual budget, they're running out after only 5 months of the year. They are running out. They're out of dough. There's going to be all kinds of problems at Homeland Security. There's going to be all kinds of problems with delays at airports because of layoffs. They're going to lay off people because they've run out of money to pay them. The United States Treasury and the Congress of the U.S. is not allocating 20% more money to various departments to just go blind and knock yourself out. They're being cut back everywhere. Forest fires. This year's forest fire season is going to be one of the worst ever. And the resources to fight it will be to the states, not the federal government. FEMA disasters, those hurricanes in St. Louis last week, and hurricanes coming to the countryside for the rest of the that region. FEMA doesn't have the dough. They don't have the personnel to look after people anymore. They've been cut. They've been eliminated. We've only just begun to see the tip of the iceberg of disastrous policies instituted at the highest level. And it's going to be ugly. Trip hazard 3, I don't know what that means. Air traffic control losing signals, fatal accidents imminent. Scary stuff. Really scary. Lisa, good morning. Welcome. Oh, my. What can I say? American Express apparently leading losses on the Dow Jones backing off. Well, we'll figure out what happens. We're down 244 on the Qs at 519.57. We're down 159 on the spiders. The SoFi shares are 13.48 right now, down 24 cents. GameStop is holding an 8-cent gain, 27.97. That's the only green stock, the only green arrow on my screen on my phone right now. I've got Rocket Lab lower, ASTS, MSTR, AI, Supermicro, NVIDIA. They're all down. Here, little there, nothing much. Google up 6 cents. That's a winner. Apple, Microsoft, Meta, Broadcom, Amazon, Intel, Netflix, all lower right now. They're all red. SmartRent, Coinbase, red. Costco up 135. Eli Lilly down 158. Uber up 42 cents. Then we have losses on Cisco, Adobe, AMD, Unity. We have a gain of 42 cents on Enphase. A drop on Spire, 8 cents. Moderna up 68. Pfizer up 57. IBM down 75. HPQ up 10 cents. Home Depot down and now only up 181. It was up $7-8 this morning. It got up to $389. It's back to $381. $8 off. It's falling. It's going red. Home Depot will be in the red. It had no business going up. Vanik Semiconductors down 240. Goldman down to 369 this morning. Boeing is up 240. Target up 26 cents. JP Morgan up $1. Walmart up 15 cents. Only 15. Disney up 12. American Airlines down 3. DraftKings down 80. AMC is down a couple of cents. Royal Caribbean down $5 at $248.96. The folks over at Norwegian Cruise Lines, they had an investor day. They were talking to the Wall Street community, talking to them about how they're doing as a cruise line and what their plans are going forward. They do not bring to New York the kind of news, the kind of stories that people get that are being enticed to come on board Norwegian. If you watch an ad on Norwegian Cruise Lines, you'll see Eric Stone Street, the guy who played Cameron on Modern Family. He's the spokesman right now for Norwegian. Come on, have a good time. The guys at Norwegian, they went over to Wall Street to see the analysts and top backers of all their bonds, of which there are billions out there, to reassure them that all is well and that everything will be just great. And what they talked about and really highlighted was how they were going to squeeze $300 million in spending cuts from their business. They're going to show Wall Street that we're going to be $300 million more profitable next year by cutting costs. And what the cruise passengers don't know, are not being told to them, is that they're going to extract savings from lower staff levels on shore and on ships. They're going to extract savings on food offerings. One way to do it is you set up a little barbecue area on your pool deck on a cruise ship, and you crank out hot dogs and pizza and burgers and fries, and you entice the folks who are sitting in the loungers on those decks and who are walking by to stop and grab a burger and grab a hot dog, and you get them, you hook them at 11 o'clock in the morning, and they pick up for nothing these cheap food offerings. which means they delay or even postpone a buffet offering. And you just saved a bunch of money because you know that if you can crank out 1,000 hot dogs and 1,000 burgers and 1,000 slices of pizza to 5,000 people, you can get a bunch of these kids and teenagers and parents to eat this stuff. You've just reduced the food expense on your cruise by millions a year, every ship. It's huge. Other game plan is where you have the main dining room and you go and you get your menu. And if you're a cruiser, you know that usually the items in a menu in a dining room on a cruise ship, on the main dining room, there are no prices there. It's all included in your cruise. While your offerings are cheaper, Salisbury steak instead of a strip loin steak. So it's hamburger meat versus sirloin. Much less pre-prepared foods. More processed foods. And then if you do want a steak or you do want a higher item, it's got a price to it. It's an added surcharge. $5 for this dish, $4 for that dish, $8 for that dish. Fuel, you use shorter cruises and you do islands in the Caribbean as resort islands. You don't travel as far. You cut back your cost. Jennifer is in the house and she's pointing at my arm, and you got this, and I picked at it too.
Well, of course.
It is what it is. Welcome, Jen, to the show. How are you?
Good morning, good morning.
We're just talking about how Norwegian is going to cut $300 million out of its budgets, and passengers know nothing.
Yet still keep their customers happy.
Keep them all happy. The nickel and dime
coming
cruise
back.
line, Norwegian, yuck, not going to be a great experience. But anyway, it is what it is.
It is what it is.
How are you?
They got to do something to stay afloat. To that afloat.
Then keep Wall Street interested. Yes, it's not enough to make just as much money in Wall Street. You have to make more money at Wall Street. You have to always make more money than last year.
So I thought it was Tuesday and the markets were up.
No.
Did they start up?
No.
Oh, never
We've been
mind.
red all day. Nothing dramatic red, but we are down 2/3 of a point on the NASDAQ. I think it'll get worse. Not like we're falling off a cliff worse, but I think this slow drainage is going to be on for a while.
The drip.
The drip, yeah,
The drip.
the negative drip. We've had
Slowly.
6 days of ups. Now I think we're going to plateau and maybe give some back.
That's slowly getting tired.
Yeah, of course, we're only one comment away from any official at the White House to
Well, I
tank
try
these
not
markets.
to say anything.
To tank these markets.
They weren't waiting for me.
They're not waiting for you. Oh my God.
My water's boiling.
Your water's boiling. Thank you for joining me. I got to figure out what to have on my bagel today. I think it's going to be ham, cheese, and egg. I'm thinking, but later.
Becoming your Tuesday.
You know, it's going to be my Tuesday thing. I think it's the way to go. You know, in the next 10, 20 minutes, maybe. See how this works out. Thank you all for joining us today. We got some more comments coming in here. Thank you, everybody. Bootstraps are the new FEMA. John T., I bought some put credit spreads. No, you didn't buy. You set credit spreads. You created a put credit spread trade. That's what you did. 511, 514 is the range. 20 contracts, and they gave me 22 cents a share credit. So it's a $3 spread. $300 is the cost per spread, 6,000 in this case. And you got $440 in cash to do this trade. And as long as the stock, the Qs stay above 514, you're in business. 519 is where we're at. You have a $5 protection with the expiry, I suppose, today. Trip hazard. Oops, I think that was a butt text story. I don't know what's going on here. Savage of Wall Street. I hope you people understand that everything being done by this administration is by design. Yes, they are incompetent, but the goal is civil unrest so they can give us martial law and Trump stays. John T., I did those on the Qs, by the way. I figured that. Christina is here. I'm late. I have $14 SoFi cash secured puts that expire this Friday or Thursday if the market is closed Friday. We're not closed Friday. We're closed Monday. So, Christina, you've got $14 SoFis. We're at 1342. They're in the money, 58 cents at the moment. Jeff Glass, I have friends that are long-time U.S. Forest Rangers, USFS and NPS Rangers. I'm assuming that's what these are, national parks and so on. It's been a nightmare, and more firings are coming here. The Republicans' budget that is currently working its through cuts their pensions as well. Wow. Charlie, I sold 6 Qs, triple Qs, 523, 527. So your calls, these are call spreads. This is a $4 spread, bringing in 31 cents. So you're putting up $400 to get $31. It's about 7 something percent, 6 times. So you brought in 180 odd dollars on this spread, this trade. And so if the stock, the Qs stay above stay below 523, 527, you will make that money. Okay, Richard Carlin, good morning, Auntie Jen. Savage of Wall Street. Okay, yesterday sold an Enphase $45 cash secured put that expires in September, and I got $545 for this thing. Enphase. Let's take a look at what Enphase is doing. Where are we at on Enphase? There we are. We're at 48.85. He sold a $45 cash secured put out of the money. He got $545 for it. I'm looking to fold my arms for 4 months on this one. I have been writing the same cash secured put for a month, and I keep buying it back to sell the next day. Unbelievable. Well done there, Savage. 545 on 4,500. So you put a 4,500 to get $545 back from now to September on Enphase, and the stock is at 48.86. So these are out of the money cash secured puts. They're worth nothing. They're going to shrink to zero if the stock stays over 45. Very interesting. Jay Gill, good morning, Auntie Jen. Michael H, I have 50 SoFi $13 cash secured puts that expire on Friday. I'm getting a little close, but my arms are folded. This stock on SoFi is out of the money. We're sitting right now at 13.42. These are 13s. They are worthless on Friday. So we'll see what Mike does there. Jay Gill, good morning, Uncle Bruce. Don't you feel to be left out? Don't want you to be you don't want me to. Thank you for that. Henry T, I agree, Uncle B. Okay, Savage of Wall Street. To be fair, I don't know why all these folks all over are so confused and so angry with how this administration is handling things. The orange dotard told us exactly what he was going to do, and he's doing it. Why are we so surprised at this guy? There you go. Departments are running out of money already for the fiscal year. It's going to be a nightmare travel season through the United States this year. It's going to be a nightmare for forest fires. It's going to be a nightmare for FEMA, a disaster recovery. Communities in various states are going to be decimated. They always are. Tornadoes are tornadoes. I mean, they are not going to stop. Then there's hurricane season that starts late June. Get ready for the party, pals. Who's going to pay for it? It's going to go to the state level, and then there will be properties abandoned, people moving away who just got wiped out.
In our Joshua Tree Park, we need wardens in Joshua Tree Park to stop people from trying to take Joshua trees home. They destroy the park.
Oh, no kidding. It's scary.
Yes, you
it's
can't
just
cut them down. We need more in this.
It's just scary. The GOP got so wrapped up in demonizing the left and grifting, they forgot how to govern. Yeah, they certainly aren't doing that very well, are they? Unbelievable. And then you got the spokesperson for the White House, that little girl there, what's her name? Ditzy, whatever, who says that China pays the tariffs. It's countries that are unfairly treating America that pay the tariffs. They've been ripping us off. Oh my God. That's an insult to Americans. I don't know what is. Mike H, I know someone who's a manager of air traffic controllers in a busy New York airport. She said it's a complete, show right now with the cuts. It's a complete crap show. It's bad. Jeff, governing was never the plan. The grift was the plan. Lisa Caroline Levitt, she is insufferable, in my opinion. Utterly insufferable. Well, there you go. Juan, I have 20 SoFi cash secured put, says Juan. There you go. Yeah, well, America, this is your official spokesperson on behalf of the government. Your government. These are your people. You put them in there. You did it, America. You did it, and you got them. They're all yours. They're not ours. Susan Shops, 133 on the thumbs up meter, Bruce. Thank you all for hitting the thumbs up meter. Let's take a look at the question of the day and see how that one is coming out. We have 293 people who have answered the question of the day. The question is, how old are you? That's all I'm asking today. How old are you? Well, under 30, 5% of you are under 30. That's really interesting. Out of 293 people, 14 are under 30 watching me live. And that you can understand why. Look at the face. Look at the head. Look at the lack of hair. I ain't pretty. No wonder there's only 5%. 30 to 50 years of age, 55% of you are between 30 and 50, the prime time age to start writing options. Oh my God, you are the generation that I am shooting at. 50 to 60, well done. 24%, 50 to 60. And over 60, you guys deserve gold medals. 16% of you are over 60 years of age. You are writing contracts, options contracts, taking money from the SAPs to compound your wealth. Oh, this is good news. If some of you are over 60 and you've just learned in the last 6 months how to write options, and it's bringing you $1,000 or $2,000 a month in side gig money, and you're using that to pay for your medications or the cutbacks that the Trump administration has put on you out of left field, God bless you all. I'm so relieved. If you are veterans, any of you who are veterans out there who need help, you're making money writing options. You're 50 to 60 years old and you're divorced. You're single again. You're widowed or widowered for whatever reason, from health or from divorce or from what have you. Oh man, is this a difference maker? Are you a single mom? There are females who watch me around the world who are option writers, and they're damn good at it. So many women are option writers on this channel who've got kids, and they are able to raise their children, able to get their clothing, able to cover the cost of these school programs, able to get the kids into swimming, piano, dancing lessons, gymnastic lessons, whatever. And then those of you who are 30 to 50, 50 to 60, who have children in university or going to university, you're able to help those kids. You're taking on the challenge so that they don't have to borrow $250,000 from these ridiculous predatory lenders that the Trump administration is making it so easy for them to screw you over. You are protecting your kids by writing option premiums. It's great. I am just relieved. Thank you all for being here. 134 and counting thumbs ups. Keep them coming in, you guys. Savage of Wall Street says that orange buffoon said he would gut Medicaid, the VA, SS, Social Security, the Department of Education, so he could privatize it all. He said he would give powers of mass deportation to ICE and the police. Why are you shocked? Why are you shocked out there? Henry T, just a quick shift, air. My Fidelity yield gives me 3.95%, is better than regular bank savings. But Henry, you can do better than that. You can buy ETFs that are corporate bond ETFs and probably get 7.5% payable monthly. You might want to look into that. Juan, look, I have 20 SoFi, 1250 expiry for this Friday, Uncle Bruce. My question is, my total gain today is $128. The total cost base is $208. So 3 additional days are worth $80. Is this manipulation from Fidelity, Uncle Bruce? Juan, you might want to just close that position out and turn around and write a $13 cash secured put position out a month or two and bring in real dollars. Get a position where you can bring in maybe a $500 hit or an $800 hit or $1,000 or two. Go to January 26 and bring in $3,000, $4,000, $5,000. I mean, bring in some dollars, Juan, and stop with the pennies. Don't wait till Friday. Just get on with it now. Charlie, a Palo Alto Network ad keeps popping up over the chat every few minutes. Seems like YouTube found a new way to advertise. I don't know what to say. Charlie, good morning, Susan. Savage of Wall Street. Boom! I just sold 5 AAOI 1750 cash secured puts that expire September for $342. Thank you. May I have another? Not looking to do too much. I'm done for the day. Now I can start real work, and I'm already in the green. Life is good. Way to go, Savage of Wall Street. Bringing in some more dough. Juan, thank you, sir. Consider it done right now. I am making that move as you suggest. Those of you out there who have cash secured puts dying this Friday, if you're down to the last 10% of your profits, 20% of your profits, or you can literally, I mean, just seriously roll your 13s that die Friday into 13s that die a month from now or 2 months from now and bring in a couple of $1,000 today, do that. Stop dicking around with pennies in the last few days of a contract. It's just not worth your time. I'm trying so hard. Anyway, Susan, busy looking triple Q call credit spread right now. Thoughts on buying buying 560s and writing the 550s? June 6th for a 51-cent credit, or I'm thinking of writing June 20, 550, 560 for 108. See, now there's something interesting. There's a 14-day differential between the June 6th and the June 20. And you either take 51-cent credit or 108 credit. So one thought is the next 2 weeks, the 108 credit in 2 weeks from now might be 51 cents. The June 6th 51-cent credit in 2 weeks from now will not be zero because we might be close to zero because it is May 20th. I should forgive myself on that. I should forgive. But if you go to June 20, you give yourself more time. And you have time to roll over if necessary. So 560, 550 on a Q, which is at 519 right now, that 108 might be the trade to think about. It's a $10 trade, bringing in 10.8% on your money. Look, if you buy it back at half, well done. If you buy it back at 3/4, great. If you make 80%, even better, you'll then put together a July contract. So, Susan, take the bigger money. I would do that. There's nothing wrong with the 51-cent trade. There really isn't. There really isn't. But you're probably going to make 25, 30 cents on that one. Whereas if you do the other one at 108, you're going to make $500. And I would rather you take 1,080 in and give back 500 and keep 580 less commissions, rather than take 510 and give back 200 and only make $300. Make the 500. That's in 2 weeks. That's what I'd be looking at a minimum. So, Susan, you got your job to do there. What are your thoughts, folks? What do you think she should do? Is that a good move? Should she write the June 20 for 108? There it is. Or should she write the June 6 for 51 cents? It's a $10 spread either way. Which way to go? Something to think about. Yeah, June 20. The June 20 is the third Friday, I believe. So that'll have a better liquidation. It'll have a tighter spread. You know, 108 to you, easy in, easy to create, easy to get out. Thoughts? What do you think, folks? What should she do? You tell me. We're down 95 on the Dow. We're down 292 on the Qs, and we're down 211 on Spiders at 519 on the triple Qs. SoFi down 30 cents at 1342. It seems to have stopped falling here. Got down to 1337. We're now 1342. We've traded 10 million shares. Nothing much going on overall. GameStop is up 18 cents, just a little better. Rocket Lab down just 13. It managed a gain yesterday. It did manage a gain yesterday. ASTS is up 33. MSTR unchanged. AI down 36. Supermicro down 97. NVIDIA down 229. Tesla up 308. Palantir down 18. Google down 43. Apple down 73. Microsoft down $4. Meta down $3. Broadcom down 118. Amazon down 192. Intel down a dime. Netflix down 863. Those are some of the most popular traded stocks, more or less, to give you something to think about. Welcome to the party, pals. Thank you all for being here. The thumbs up meter, we're desperately trying to get to 200 every day. We just are not able to do it these days. I guess you're not making enough money writing options. I don't know what's holding you back from giving us thumbs ups. You're not making enough money. I don't know. I don't know how you're not making money in this option market. It is so easy. They are handing it over. Hand over fist, they're giving you money. Susan Shops is debating whether to take $500 or $1,000. She's debating, how much should I take? Take the 1,000. My God, Juan, he's taking money. Others are taking money. Take the money. How old are you is the question of the day. 141 thumbs ups have come in so far. 299 of you now voted, almost 300 of you. 5%, 15 of you are under 30. That's all, just 15. This is the age where you want to learn how to write options. Oh my God, is this the age? The opportunity is endless. You'll be retired in your mid-40s.
But those
If that.
50s,
What's that?
it's still life-changing for them.
Oh my God, it's a life changer for anybody, whatever age you are. Over 60 years of age, 17%. 50 to 60 years of age, 23%. And 30 to 50-year-olds make up 55% of my audience right now. And whatever age you are, this is an opportunity for you to make some serious money. I don't know how much more obvious this can be for you. I desperately hope that my message is getting through to you guys. It seems to have caught the attention of a certain number of you. 181 of you are still here, but millions don't know how to write options. It just blows me away every day. The more you know about option writing, it blows you away, I'm sure. You're sitting at home going, I can't believe that my best friend won't write options. I can't believe somebody bought what I wrote. No, I can't believe what they bought what I wrote. But I have friends at work that I used to work with. I don't work there anymore. And I'm telling them, hey man, I've been out of there for 5 months. You'd think I'd be crawling back if it wasn't working for me. I'm not coming back. I'm never coming back. Come on out here. They won't even try. They won't even write one contract. They won't even do it. You're willing to show them, hold their hand, stroke it, tell them all will be fine. It'll all be okay. I'm here for you. Not working. It's unbelievable. I know. You know what else is unbelievable? This bagel. This is unbelievable. Ham and egg and cheese on a toasted sesame seed bagel with a little bit of ketchup to dip it in right there. Look at the, oh my gosh, is this going to be good? Oh yeah. So good. Thank you, Auntie Jen. Love it. Love it. Love it. Oh my. I love reading about how you guys are making money. I love it. I love to share the news to the market, to the world at large. Those of you who are skeptical, open up a practice account, go into the options side of it, and write these contracts. Susan Shops is thinking about writing contracts. There you go. Susan Shops, am I out far enough at 550? The queues are 519. Yeah, you're out far enough at 550. For now, you're watching it closely. You can always roll this thing. Go ahead and write both of these. Why don't you, if you got a practice account, why don't you write 10 550 560s for queues that expire June 6th? And why don't you write 550 560 queues that expire June 20th? Write both of them. You're in a practice account. What do you got to lose? You're not risking anything. Figure out which one does best in the next week. Watch them. Watch these. The account will tell you how you're doing. Are you making money or aren't you? Do you have to do a rollover or don't you? Are they depreciating or aren't they? Who depreciates the most? Who can make you the most money? Because it's the same price to put each trade together. I don't recommend it enough. But I should be telling you guys, all of you who are writing options all the time, you should be sitting on practice accounts as well. You should be experimenting on different trades all the time. Even if they don't work out, you need to know. You need to know if certain kind of trades do or do not pay off. This is 101 option writing. University kids, it's college. This is your chance to become a prolific option writer. Change your life forever. Oh, this is so good. Oh, so good. Okay. Corinne, number 143. Susan Shops. I'm wondering about this trade. Charlie, I would probably do the June 20. But in the end, it's your decision. Charlie, I would have, it would have surpassed all-time highs. This is a safe bet. Is the Q going to return, is going to break all-time record highs in the next 2 weeks to 4 weeks? That's what Susan Shops is up against. That's a decision she has to make. I say take the money, grab the $1,000. Mm, 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 mm. GameStop up 25, ASTS up 38, Rocket Lab down a penny. We're going green on some of these guys. Good. Good. Mm, mm, mm. Fantastic. Welcome all to the party, pals. That's a good point, Charlie. Markets have to hit new all-time record highs for Susan's option not to pay off. That's the bet. I like the odds for Susan more than the market. Mm, mm, mm. Wonderful. Yeah, the all-time high for the NASDAQ is 20,200. We're at 19,120. So in the next 2 weeks, the NASDAQ has to climb 1,000 points straight up against these contracts. That's what it's going to have to do. A month ago, we were at 16,300. We're at 19,000 now. You think there's some profit taking coming into the market? Have you looked at the chart for the last 2 weeks, how flat it is? The dip, on April the 8th, 6 days after Trump Fool's Day, we were at 15,267. 15.2, we've come up 4,000 points. You think there's a few folks winning right now that are taking profits off the table? Just look at the last month trading, and you'll note that we were at 19,000 on the 13th a week ago, and we're still at 19,122. We're not going anywhere. Not right now. We're not. So I like this. I like this idea. Trip hazard. I don't know what that means. Susan, I just checked charts. Q's high for 52 weeks was 540. A call spread for 550 should be very safe. My iPad numbers tab is stuck, so I have to write out the numbers laughing out loud. There you go. Yeah, I think there's easy money to be made there, Susan. And anyone else? This is so good. Oh boy. Bagel's delicious. Delicious. Cheers, everybody. Second half of this bagel. Oh, yeah, baby. Who's having breakfast with me today? What are you folks having for a bite to eat? Share with the channel. Get some energy to keep on going. Have any of you guys been getting ads where the ads are for like flight deals or resort getaway deals, cruise offers? Are you getting bombarded with banner ads? Yeah, are you guys getting hit up to go, come here, come over here, come see us, do this, do that?
Yeah, we're getting hit with the airplane ads for sure.
Hmm. Curious to know what's going on with that. Juan says, yeah, scrambled eggs with spinach, bacon, and Trader Joe's hash brown. Right on.
Oh, there you go.
Those rank very highly, those Trader Joe's hash browns. Mm-mm-mm. Mm, mm, mm. $5.19.02 on the Q's, down $2.99 today. There you go. Call credit spreads. That's where I would be. And put credit spreads. You can do a condor. One, a premium member can't imagine watching these rants with commercials. The cliffhangers would be too much. There you go. Mm. One, Uncle Bruce, the $13 SoFi, Jan 26 expiry, pays 207. If I write them, I'm on the hook to buy this stock for 10.93. So 10 contracts are in. I just collected $2,000. Yes, 2,000 versus $80 of upside. You got $2,000 in your hand. That's where you want to be. Right on one. Strengthen that account of yours. Absolutely. You bet, buddy. Wonderful. To do 10 contracts, you needed 13 grand. You just brought in $2,000 on top of the 13,000. You're sitting on 15,000 now. Yeah, that's called making money. 1341 on the stock. I think it's a moneymaker. I think that trade is a moneymaker. You're not going to be waiting until January to roll it either. You're going to be rolling it well before January. Beautiful. Charlie, the ad only popped over the chat window. It did not interrupt the live show. Isn't that interesting? Yeah, YouTube is now finding ways to get in front of you to get, I'm theoretically making more ad revenue, they say. I don't know about that. But I'm doing what I can to give you the information to make you money. Juan, it's a privilege to listen to you every day, Uncle Bruce. Thank you for all you do for us. Thank you, Juan. Appreciate you. It's so great to see you guys on these one-on-ones. Those of you who look me up to get a one-on-one session, we have time to go over your accounts and your trades and your strategies, help you fine-tune your trading strategies to enhance your returns. For some of you, slight tweaks in how you do what you do and slight adjustments here and there can make $30,000 difference in a year. I mean, it's insane how much money you can make just being a slightly different writer. And it's a $500 cost to be 30,000 ahead this year. Next year, you're going to be 60 ahead because you're compounding your return. I'm excited for some of you how well you're going to do. Last idea, the Qs, July 18. I can write those 560, 570s. I can go even further away. I get $1.31 6 week out. Is that too long? I feel better going further out. Afraid market might do a bear rip up. I plan to be out 2 weeks or so. You can do that trade as well. It's $1.30 instead of $1.08. $1,300 return. 13% upfront gift to you for 10 of those. Not a, if you're going to do 10, I'm assuming that's a nice trade. Another little headline just popped up. It had to do with the effect of tariffs. I should say a side effect of tariffs. The prices for car and home insurance are going to go up. You have to understand that if you get into an accident with your car, whether you're at fault or not, doesn't matter, because the insurance companies out there are going to need to bring in enough capital from their premiums to help repair vehicles. If you're not at fault, the other guy's insurance company pays, but that insurance company is now paying more to the mechanic for all those body parts, all those parts that need to be replaced on the vehicle. They're all subject to tariffs. And so the repair of any van, any truck, any vehicle, motorbike is soaring. The cost of repair is going much higher, and insurance premiums are going to have to go up for it. For home insurance, it's the same thing. Home insurance premiums are going to soar because the cost to buy lumber for homes has gone up. The tariff in place between Canada and the United States, the cost of copper wiring, the cost of electronic components, the cost of switches, lights, drywall, whatever is imported. Some is made in America, but a lot of it is imported. That is surging across the board. And that means insurance claims are going to be more expensive to fix. This is where you're a good driver, you haven't had a claim on a house, your rates are going higher. This is a spin-off from tariffs. These experts that keep telling us that, inflation will be minimal, the tariff thing will be very minimal on inflation, they're full of crap. They don't think about the entire economy going down the line. That's the reality. Trip Hazard, I have YouTube Premium, so no ads. It's a wonderful way of life. One, Charlie, are you writing call credit spreads today on Qs? If what range are you targeting? Mike H, I have a U-block organ, so no ads either. I have that. Vilbus, car insurance has been spiking since COVID already. Mine went up absurdly, says Vilbus. Susan Shops, I hope my Q call credit spread study helps others. I want to do these spreads knowing we're going into bearish times. We need to be safe and not get tangled with stocks rising too fast. Charlie, I did write 523, 527s for a 31-cent premium. I did about 15, 20 minutes ago. We're at 519, and he is $4 out of the money on that trade. So he's doing a $400 spread, bringing in 31 bucks. There you go. Charlie, call credit spread, 6 of those. Mike, what's so bad about tariffs? I was told China pays for them. Apparently, that's what the little girl says in the White House, that young little girl that with the blonde hair, she's kind of ditzy, but you got to believe her. She seems so sincere, like she really believes what she says. You got to believe her, don't you think? I mean, come on. Charlie, I would do the June 20, Susan. You're not getting enough extra premium for the time. In my opinion, one, nice. I will follow, waiting for another 15 minutes for the market. I'm going to follow this trade. One, same thing will show up for the bagels, Uncle Bruce. Thank you, Juan. Please make a lot of money. I want you to get rich. You and your son, just make a pile of dough out there, buddy. Get richer. 519.64, 519.72 on Qs. The Dow's down about 90 now. We're fluctuating around. The spiders are down 144 to 593.41. SoFi 13.41 down 32 cents. GameStop is up 40 cents now to 28.28. Rocket Lab is up 2 cents. ASTS is up 62 cents. MSTR down 250. AI down 19. Coming on. Supermicro down 97. It's a little better than this morning's low of the day. Nvidia down $2. So there's some green showing, or green tendencies are showing, but the big indexes are lethargic. And we're up 18 on the VIX. Nothing going on there. Oil down 31 cents. Nothing going on there. Okay, everybody, there you go. All right. Cindy, I do a few days in advance on the cues. When the stock goes up, when they go up, I write call spreads, and then down I do put spreads. Way out of the money, but more money, about $3 spread. I go way out and I take money. This is okay. Some of you can make some really good money, again, depending on what really appeals to you, the risk factors and so on. You can write contracts a month out, 2 months out, 3 months out. You can do credit spreads on these positions, and you can take in dollars of spread and just fold your arms and just say to yourself, I'm not going to trade on a daily basis, but when I close a credit spread that I did, I wrote it 3 weeks ago. When I now close it next week, I will bring in enough credit and enough profit that equals a week and a half of trading, daily trading. I love the slower pace of it rather than the faster pace. Whatever turns you on is the way you go. It's okay. I'm doing what I can, and so are you. We're down 45 on the Dow. A little buy wave might be happening. We're down 11.9 on S&P. The Nasdaq down 65. The triple Qs have gone up to 520.13. They are in that best range of the day. They seem to be at the high level of the day, which allows you to pull the pin, pull the string on a further out set of contracts on NVIDIA. If you're going to write a call credit spread, let this market rise a little and then write 526s, 27s, whatever you're going to do, get up there. If you can, you can. It's the way it is. Giddy up, everybody. Charlie, I'm keeping an eye on my Q trade all day, Juan, and I'm ready to roll if I need to. I'm ready to do it. If I have to, I'll do it. There you go. And there it is, 520.04. The high was 520.24. We backed off a little bit now. You're going to see waves, of course, in this market. Welcome to normal. Welcome to normal. Thank you all for joining us. Don't forget the put side of these trades. If you have to do a rollover, you can write puts to bring in additional credit to help afford the roll up out of call. There's ways to do this. Pay attention. There are lessons on my website all about how to do roll-ups and how to do call and put spreads and how to generate the returns from trades that are going against you, how to make money no matter what direction the market wants to go. Welcome all to the program. Nice to have you with us today. All right. Nice to see you all. Let's go. We're down now 56 on the Dow. A little pullback again. We're down 13 on the S&P. We're down 68 on NASDAQ. And now the Qs are at 520.07. They're falling back again a little bit here. There you go. Brian, I wrote ASTS January 26, $21 cash secured puts for $4.65 yesterday. The stock is up 77 cents again today, now to $25.38 ASTS. In the last week, yesterday they were as low as $24.12, and now we're $25.38. And our friend Brian is smiling from ear to ear, wishing he could have written 10 of those, because he would be up thousands of dollars and climbing. But it's all right. Brian is coming on here. Also watch Chewy, 52-week highs continually being broken now. Premiums aren't that great, though. IV very low. There's certain stocks you can't trade on options. They just can't do it. They don't have the following. You have to stay away. Just stay away. Be safe. 25.34 up 73 cents on ASTS. Brian's cash secured puts are out of the money and now even further out of the money. Well done. 35-cent gain on Rocket Lab, 35-cent gain on GameStop. SoFi, 13.43, only down 30 cents on the session. Spiders now 593.71 and Qs 520.01 right now. As we see. Susan Shops, Cindy, how far out are you going on your triple Qs? How far out do you like to go in time with your triple Qs? There you go, kids. What can I say? Welcome to the party, pals. Headline coming out: Trump is souring on lifting the SALT cap, calling it a gift to Democratic governors. Just politicizing it all the way. The problem that these guys just don't seem to get is that if you offer a higher SALT deduction, which is a deduction against income tax, against other income tax, you're making it that people have more money to spend on goods and services and product. If you don't give a higher SALT credit, you have money going to governments and not going into the economy first. And so there's no economic spin-off. That money gets sucked out of the economy, goes into the government treasury, and there it is. Now, maybe from a good governance point of view, it's the right thing to do. But the problem is, and the reality is, that Democratic-based states where the votes are that the Republicans would love to get are never going to get those voters, because you're just alienating them and you're making it more expensive with what you're doing. You're never helping them out. And it is what it is. It's all politics. It's nothing personal. It's politics. And there you have it. Anyway, Cindy B says, I'm going out about 3 days now. I don't know what this is here. Cindy, Susan Jobs, I go out about 3 days. I did a June 20 on the Spider, but I just like to trade too much to sit still, laughing out loud. So I'm not sure, again, which is which here on these further out expires. I don't know what's going on there. To each his own. GameStop looks like it's up almost 40 cents, 28.28 now. Rocket Lab up 37 now, 26.17 on Rocket Lab. And ASTS is up almost $1, up 95 and climbing. SoFi only down 28, coming back, 13.45. All those cash secured puts are shrinking on SoFi. And congratulations, those of you who have written new cash secured puts today. Well done. They're all shrinking out further. 520.31 on the Qs as they are climbing a little bit more. Still down 170 on the session today. Sorry, Uncle Bruce, we're talking about triple Qs right now. It's all good, Cindy. I don't mind one bit. Love it how you're doing it. If you're comfortable with three-day out expiry, some of you are comfortable with 5-day expiry, knock yourself out. You can take a credit spread anywhere you want, as far out as you want to go. Time eats these contracts. That is the bottom line, that if they're out of the money, time eats them up. And that means you make money on shrinkage. It's undeniable. Whether you have a 1-day, 3-day, 5-day, 5-week, 5-month, you make money on shrinkage. It's a question of what timing is working for you and not. It's all just a personal preference. It's okay. All right, kids, that's the story. I'm sticking to it. Jen and I are going to say our goodbyes here, wishing you all the success in the world today. We hope you get nothing but very, very rich today and tomorrow and the day after. Thank you for joining us today and passing along your regards to us. We pass on our best wishes to all of you and your families. Keep making the money. Thank you again for answering the question of the day and also hitting the thumbs up button, finding the time to and the energy and the motivation to hit the thumbs ups for us. We have 152 now that are in the house. Thank you again for that. Keep them coming if you can. We're looking here at 309 of you who've answered the question of the day. 6% of those who have responded are under the age of 30. 55% are between 30 and 50 years of age. 23% of you are 50 to 60. And 17% are 60 and over. So 50 and older make up 40% of this channel. And 30 to 50 make up 54%. You can see where the demographics fall here. The older you are, the more money you probably have in the market. Only stands to make reasonable sense there. And congratulations, all of you who have picked up the idea of writing options to make money. Setting up practice accounts and checking it out, checking out my classes, looking me up for one-on-ones. Thank you again, all of you, and congratulations. Have a wonderful, wonderful rest of your day. B. Tizzle, neat, 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 neat. Richard's going, neat emoji time. Charlie, I'm having the different, I'm loving the different trade perspectives on the same stock. Daily, weekly, monthly. Thanks, everybody, for all this info. Charlie, thanks to you, Uncle Bruce. Have a great day. Charlie, neat, 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 neat. Blair, have a relaxed day, everybody. I'll try to figure out if I roll or buy back or I wait on my canopy. OGI almost got moved. Good for my calls. Curious if rescheduling soon could happen with these changes. Boeing Tiger. Neat, 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 neat. One. Neat, 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 neat. Mike, thumbs ups for Uncle Bruce. Thank you all. If you're enjoying the show and you're finding it useful and informative, hit the thumbs up button. Get YouTube to send more people here. And they'll also become writers and they'll share your thoughts with you as well. 158 thumbs ups. Thank you. 314 results on the poll question. Thank you again. The interaction is priceless for us. It makes a difference with YouTube. One, neat, oh, Brian, neat emojis. There you go, Brian. Make a bunch of money. You too, Juan, Mike, and Boeing Tiger, Splair, Charlie, Richard, Cindy, Susan Shops. Get richer, you guys. Mike H, make money. Vilbus, Trip Hazard, get richer, please. Get a lot richer, you guys. Thank you for joining us. Jen and I are saying our goodbyes in 3, 2, 1. Bye.
Bye.